And obviously, I'm here to answer questions, and we do this on the channel all the time as well.
Yeah, and we've got investors, and I want to give a shout out to our community. Like, we've got investors that hold, I know one guy holds 1.7 million shares. I'm not going to mention his name. I know another member that holds over 1 million shares. And I would say that our community holds probably close to 5 to 10 million shares. So I think that we're really well positioned, our community. And I know that most of our investors are long-term investors, and they have no problem waiting for the company to grow. Because as I was saying before you joined, I really believe that if a company has a tight float, growing revenue, strong management team, and no debt like you guys, that a company doing about 10 million a year in sales should be priced around $1. That is kind of the way I think of the market.
And I appreciate it, Rich. And obviously I can't comment on the price, but I will say from a tighter float perspective, I think Rich TV has done a great job in creating that tighter float once again from, I think, original time. So I think that's going to help a lot, so that as the right stories and narratives do come out, that we can say there's better maybe appreciation of our value, as clearly we are undervalued versus our peers. We can only put out the best, present the best information we have and what we're doing and how we're growing, and we let investors, smart investors, figure out what that means to them.
Now, I went through the news before you joined us, and I thought the news was really exciting. Can you walk us through what happened with the 6 million in backlog at the end of June?
Absolutely. So at the end of June, our backlog was ramping up for a number of months to 6 million. So again, our backlog, different companies have different models of what's in backlog. Our backlog would be, we get a service contract for out a year, a few years, or we get a project work that isn't immediate. You're not doing it that day. And so it goes into sales backlog. So it's awarded. We know it's going to happen. And it's just a question of, as it gets executed, it changes off of sales backlog and into revenue, right? And then it's appropriate margins attached. There's one piece, arguably two, but there's one main piece that's not in that. If we're trying to capture what is our total revenue until we put out our quarterly financials, is repair work. So repair work, there could be some element of we're executing services for a customer where certain elements of that are under our costs, but for the most part, repairs. So urgent repair, pneumatic controls, things are down, we have to repair it. They don't really go in backlog because it happens. We make the order, we just solved it, so it stays outside of backlog. So backlog is something that isn't so immediately executed. And so we were at 6 million at the end of June, which we thought was a good sort of, at that point in the year, we were up in services revenue, up in repair revenue, and project revenue was lagging compared to the previous year. But we had the 6 million in work that was awarded at the end of June. So effectively the last 3 months, without reading into it too much for folks, in the last, so July, August, September, so that kind of overlaps our year end, we executed about $3 million of that. So if you just assume $1 million a month, that takes us to an interesting run rate. And so that's why we thought it was relevant to show we started eating through and getting that project revenue and services revenue executed. And that was the part that was lagging before, and it started coming back. The more interesting part is, as we get through 3 million over 3 months, we're still here sitting at the end of September at 4.5 million in backlog. So I wanted to show, I think we added 1.6 million over those 3 months in additional backlog. So it's not a one-time, we continue to show momentum. That was really the point, was to show where's our backlog. We did chew through a lot, which we wanted to show people that does convert into revenue. And then, I mean, really, Rich, the best part about it, I think, was conveying, people wondered, what do we do with all these new technologies, all these new distributors that we've had by the end of the summer? And I just really wanted to demonstrate to people, in the last 45 days alone, our distributors put out over $15 million in proposals. And any single one of those proposals that turn into contracts is our revenue coming in, not a commission. If it were 15 million that was awarded, 15 million goes in our top line revenue that we get to put through. And so we want to give a sense of, we've been building up this platform, and that's how it's starting to trickle through. And as those come in, they get directly into our top line revenue, and we start to see the growth we're talking about.
So do you have an idea of what your run rate is for this year? Can you give us an idea of what the run rate will look like?
From a projection, we're not doing that as a company. It's certainly not like this. I mean, if we did that, we'd probably put out a press release to do that. This company has not given forward projections of what we're trying to do. I think for the most part, it hasn't done in the past. So it's a bit of a changing the process to be much more sharing of the forward looking of what it is we're doing. But the other part, to be completely blunt, is where we are right now is nice. The organic growth, I do believe, will be exciting, but that's not why people jump on the stock for. And we're looking at acquisitions and other opportunities that really scale our revenue, really get our juices going. It's hard. You can't assume that I'm going to close that one or that one. So it's really difficult when the majority of our growth will come from acquisitions to really pinpoint what forward projections would look like. I don't think it's fair to try and do that until we're more definitive on acquisitions that are locked up or in a position to report. But, I do feel comfortable from an organic perspective. We're putting in the resources to get that good organic growth. That's just one piece of it. It's the other side of it, the acquisitions that are harder to obviously identify where we'll end up.
Now, I'm really a fundamental investor. Always have been. I love to really understand the numbers. You guys are still debt free. Is that correct?
That's right.
That alone, guys. I mean, when a company has no debt and they're growing in revenue with a tight share structure and a huge community of investors like we have that are just buying the stock, buying the stock, buying the stock. We've seen that every time it gets to that like really low level, it gets bought up because we're sitting there. And I'm not going to lie to you. We've been sitting there telling our community, we think these are good entry points. And when you think about some of the other companies that we've been working with that are doing $1 million a quarter, some of them are trading at $3.
Yeah.
They're doing $1 million a quarter. They're doing less revenue than you guys. So in my opinion, this is grossly undervalued, underappreciated, underexposed. I believe we need to do as much of this as possible to really tell your story of a company with no debt, growing revenue, tight share structure. Can you touch base on how many shares you guys have right now? Rough estimate.
I believe I got to look, it's over 48 million shares outstanding. It's a bit higher than that at the moment.
48 million shares issued and outstanding. In my opinion, the way I teach our community, if you're under 100 million, that's great. If you're under 50 million, it's bingo. So you're at 48 million shares, still very, very much an early stage growing company. And yet I still feel like there's so many people that have unrealistic expectations. When I try to explain to people, if UPI goes to $1 from today's prices, you're going to make 400%. Is that worth waiting for? In my opinion, it is, because you're not going to get that too often, Rich, right?
We were almost, I dare say it, I've been on the job for just under a year. And I would dare say that as we started literally finally having a story to tell, a narrative, and doing this market information just under a year ago, the challenge was we started from nothing and we quickly started ramping it up. And then very quickly on the heels of ramping it up and getting the awareness, we made this really cool investment in this game-changing technology and company back in February. And so that then was sort of this pinnacle of, crazy excitement, crazy amount of people jumping in for that. And we're almost too successful from the perspective of people were jumping in on a really great technology, that an investment that we made, which is wonderful. And I do, can't wait for things to come out that make that worthwhile for everyone involved. But all of a sudden I find, and it's not my business and to sort of, I can't create this condition. If people are in it waiting for that, and they miss the forest from the trees on the fundamentals of cash on hand, no debt, growing business. And we've already outlaid our strategy back in July. We're about to take this organic growth, this model that we think is successful. And there's a lot of really fun things I'm working on here that will even add to this. Now I can start completing my acquisitions, convincing people to take shares in our business or to do a deal with us. That was what a lot of that was for. So now we can start pushing that acquisition strategy and start getting double, triple, and keep growing our revenue base. It's a process. So I do feel like we have really good fundamentals and we're putting out what we can put out. to make it public. But we're having a lot of successes, a lot more that will come out over the coming weeks and months. But I can't control. Obviously, it's not my place to refer to or comment on price. I can just put out the stories we have, and hopefully people can see them for what they are.
That's my job. My job is to talk about price.
Yeah.
I can't talk about price. And I do believe that this is a company, like I said, I mean, I was doing the math. We've interviewed over 300 CEOs and companies over the last year. We obviously interview a lot of companies and we look at a lot of fundamentals of the companies. We look at share structures, we look at revenues, we look at management teams. I'm going to tell you guys this. There is not another company out there that I know of that's priced at this price, that has the growth potential you guys have, that has no debt, a tight share structure, and a strong team like this. So to me, this is a early stage company
and solutions that everyone needs in a post-pandemic world. So let's not forget about that.
I think has so much potential. But the thing is, everybody wants results now, right? People don't remember, like everyone's like, oh, Bitcoin's gone up 61 times since 2017. Well, yeah, when it was at 1,000, nobody wanted it.
Yeah.
So now people are buying it at 61,000.
Yeah.
I think UPI is going to be the same kind of story. I think a lot of people are going to, get in at 20 cents and some will sit on the sidelines. And one day in the future, we're going to see it at 40, 50 cents, $1 plus. And then people are going to sit back and go, man, I really wish I got in at 20 cents. But that's just the way investing goes. Not everybody has the patience to be a long-term investor. But I truly believe, and I've been investing for many years, for over 14 years, I truly believe that the best investors are long-term investors. I know a lot of investors that are very successful, and they're typically long-term investors. Day traders, you're going to have some good days. You're going to have some bad days. Swing trading is great too. I love swing trading as well, but I'm also a huge long-term investor. And I'll give you a great example. You guys are kind of like a little mini Pfizer, right? And Pfizer is one that I love and I believe in because their fundamentals are unbelievable. And they're so undervalued when you compare them to their peers. All of a sudden, Pfizer came up with some big news that they're going to come up with a product that you can take if you have the COVID-19 and you can get better. And the stock shoots up 10% today, just like that. So anybody that was listening when we were talking about Pfizer being our number one pick, when it was around $33, today Pfizer was at 48 and everybody makes a killing. But it wasn't an overnight success story. Pfizer, despite the fact that everyone's talking about them every day, it's taken months for them to go up 30%. Well, that's one of the biggest companies in the world.
But Rich, I mean, the part that's interesting is if say our investment our investee was publicly traded like we are, the reality is there would have been a number of updates along the way that would made everyone have this comfort and like, oh, look at that momentum. That's great. But when they're not, and they're not interested in creating that same momentum, maybe a publicly traded company has to create. The assumption can't be that if there's no information from a private company, that there's nothing. It's just, is it in their best interest to put it out at a time that doesn't necessarily advantage it for that information? And so I think you have to add that into the mix. If we had our ways, we'd be having updates probably every month on what's been happening, but we're more than content with what has been happening, and we cannot wait for a while. We cannot wait to share different piece of information. And I can tell you our CEO every day is working with them to get something out that ultimately is going to at least share, disclose what we think is pretty fascinating and supportive information, but not in my fingertips to control. But getting back to your earlier statement, we also love, while I can't get involved in what the price is, I love investors who are looking at the long term. I'm building a long-term platform that will stand the test of time, will mature and graduate to different levels of that even investor ladder. And long-term investors will have a greater appreciation, a greater ability to benefit from that type of play. This isn't a mining stock, an exploration mining stock that, are we going to find it? Are we going to find that gold? Is it a big deposit? This isn't that. We have a very good fundamental business. And a lot of the things we worked on in the summer are playing out where a number of those products, integrated solutions, approaches, pilots, things that we're working on, when we can put them out, people start to get a better sense of, oh my God, is that what they're doing? So I am pretty excited. few people in the company know how excited I get, pretty geeky about some of the things we're working on, but soon they'll be prime time ready, and I can't wait for that.
See, I'm the opposite of so many other investors out there. Other investors chase green. I chase red. So when there's a company I like,
I mean,
and it's down,
Rich, that's clearly why you have a following. But even if some company was recognized as having tremendous value and the price appreciated that way in the theoretical, I'm not talking about us or anything, in the theoretical, is that necessarily the best time to jump in when it's high?
No,
probably not by any normal.
Of course not. Like I said, with Bitcoin, people are buying Bitcoin at 61,000, but when it was at 1,000, nobody would touch it. So do you want to get into Universal Proptech at the bottom? When you look at the chart, it's the lowest it's been. Or do you want to buy it at 50 cents, 60 cents, 70 cents? So this is really, as an investor, what you have to decide. But the reality is the fundamentals of this company are phenomenal. I'm going to explain to you why. When I look at companies, especially small cap companies that are sitting at 20 cents, I look at one key metric, revenue. When I see you guys are putting out news about $6 million potential deals, 15 million in distribution proposals, that's big revenue growth. And yes, you may not get all of that money through the door, but if you can get a good portion of it through the door, that tells me that the revenue is growing. It tells me that the business is growing. It tells me that you guys are busy putting business together. And as an investor, I'm reading between the lines and I'm looking at a company that, like I said, if it's doing 10 million a year in revenue, should be at least $1 with the fundamentals that your company has. No debt, tight share structure, good management team, growing revenue. When I compare it to all of your peers and all the companies I talk to, and I probably talk to more small cap companies than anybody, this company is grossly undervalued. So I just want to put it out there. Now, I want to know your
opinion. Don't agree with you on that. I definitely, we're undervalued versus our peers. It's very obvious.
Extremely undervalued. And what does this signal to investors about where the business is going when you guys have news like you're publishing? Because I get excited when I see big $15 million proposals and $6 million proposals for a 20-cent stock. You know, that's pretty unordinary. I think people have to recognize that. I recognize that. What does that signal to investors?
Yeah, I mean, again, we can only put out what we're doing and how we think we're cornering the market with the things we're working on. But if you look at us and our fundamental business, our operating business, then I think it's great news. It's very positive. Knowing what we've even said we're going to do the rest of the year and then some, I think there's a really good signals and signs of what our intentions are, right? I'm not giving specific revenue growth, but I'm telling you exactly what I'm going to do. So I think that it's positive. Everything I said we were going to do, we're doing. But again, I mean, there's one item that obviously people want news on, and hey, we're doing our best to give it to them. We know there's something we can give, and it's just not in our control to give it, but we're definitely working on it. But beyond that, one thing, it's interesting. Maybe it's just a function of what people think about the pandemic and where we're going and what's happening, BC, Ontario, wherever. But if you start thinking about this post-pandemic world, and the pandemic's still there, people are going back to their offices, people are back in schools, certain positives are going up in certain places, but how is this impacting? We're still looking at what's the new reality, and everything I said. I did interviews in the summer and said the impact of indoor air quality on new agenda, capital spend, operating going forward will be massive. It might be a question as to when regulatory policies, bylaws on indoor air quality standards catch up. But there are definitely organizations that are very concerned about, well, what is our indoor air quality and what levels they're at. We're going to lead in that space. The deals we've done in the summer to create the right ingredients for what we're doing going forward, and I've already alluded to it, we are building an amazing solution set that goes beautifully with our building automation system, integration and operations. I'm really excited. And if I look out another, 6 months to a year, those would be the remnants of, well, wait a second, maybe it's not COVID specifically, but if viruses of a certain particle size can be floating around your air, even with MERV 13 filters in place, was that intended to make sure the viruses can still survive even after all these MERV 13 filters were installed? Probably not. And we have ways to identify that and to deal with that. So I mean, I'm really excited. what I think we're going to be able to do going forward with all of our customer base, all the new prospects. And some people might just be looking for certain immediate sales. We're looking well beyond that. Everyone's playing checkers. We're playing chess. And I'm really excited to show that play out in the coming months.
No, you're playing 3D chess.
3D chess, exactly.
I always tell our community, while everyone else is playing checkers, we're playing 3D chess. They're guessing, we're winning. They're buying green, we're buying red. But we're buying the red of the best stocks in the world. And we got a history of it. We got a track record of it. You don't get in early in pick after pick after pick by getting lucky. You get in early in pick after pick after pick by doing the fundamentals, by doing the research, by reading the news, and by interviewing companies like yourself. So we get a better feel of what's really going on with the company. And I'm really impressed, Frank. So I have another question.
Thank you,
You
Rich.
guys had this 15 million in distribution proposals in this news that just came out yesterday. What can you explain what they are for, and if you are close to closing a few of them, and what does it mean?
Yeah, so there are. We announced over the summer we have 2 distributors, national distributors, one in Canada, Sustainable Tech, and one in the United States, and each of them are at different stages of putting out proposals to their dealers, their customers downstream, and there's different amounts each one is put out, but I've spent months working with them on the approach. We're supporting them to get more proposals out, school boards, other organizations. It's really exciting. So this part's interesting. If you look at the impact, I'm sure you have investments where this is a massive impact. The supply chain. So right now our distributors are taking our air sniper, air purification, UV technology, and we're pushing that out in proposals to school boards, to all kinds of organizations. I would certainly say it certainly was never intended to be a low cost option play. It was never intended to be the cheapest UV solution in the market for air purification, because it's not. It's really effective, 99.9% effective in killing or dismantling COVID in the air, if you would. But could you get things from China and things off Amazon that are cheaper? Absolutely. Are they as good? Always debatable. But all of a sudden, the supply chain issues. About a month ago, a container that would have cost $2,000 to ship it over is now $31,000 and climbing.
Wow.
And overnight, our Air Sniper products that we're pushing out to our different prospects are now in the money. So the proposals, a number of them are in. We're waiting for these school boards and different organizations to make up their mind, but they're all grappling with the same issue. What they thought the costs were going to be have now just skyrocketed, and all these, Chinese-made products, the distribution of them, it's scaring a lot of people as to, well, is this here to stay? Is this 6 months, 2 months, a year? So I think we're in a really good position. I'm excited that it's Air Sniper, this Canadian-made technology, is going to have some advantages now for organizations who have to get moving and can't afford for supply chain issues to be resolved, because they're not going to be resolved that quickly. That should help us, again, in all the sensitivities of whether we win projects or not. It's certainly giving us a few more check marks. We'll see that play out in the coming weeks and months, and we'll continue to make more proposals, but it's certainly a feather in our cap that it's Canadian made at this point.
Absolutely. Now I have some questions from the audience, if you don't mind me asking.
No, absolutely, please.
This is from Bork, who's one of our members of our trading club. Is there a possible update on Spotlight 19? Any updates on Spotlight 19?
There are definitely things we want to say. And our CEO, Chris Hazelton, is working with them daily to find a way to get them out. Again, for many months, there are things that I wish we could have said, and I can't wait to get them out. And our CEO is working on that. So just stay tuned. And it's every day we're working on that.
Fantastic. I know these are some tough questions. I'm going to ask.
And I'm not going to give a timeline, but I can tell you it's a thought every day to try to get something out that we believe our investors need to know, and would add tremendous value to people looking at our company.
One of the things that I think makes our community really powerful and really unique is we ask a lot of tough questions. Good. I apologize if some of these questions are really tough. If you don't want to answer them, just say so. The next question is from D. Han. Can you talk a little bit about the cash on hand for the business at this time? And are you looking at any private placements for the future projects?
Yeah, good question. I mean, we do have some cash on hand. Other things, I think some warrants have been exercised. I'm not so sure exact the figure. That's generally not something I worry about day to day. I haven't seen an update on that, but there's cash on hand still, and we expect to continue to be. And the second part of the question was,
And are you looking at any private placements for future projects?
It's a really good question. I think a big part of what we intend to do going forward as we look at acquisitions and other opportunities, I don't think we're looking to go dilute everyone, go do a big raise for other opportunities. Certainly, and I've said this before, our intention would be, we have shares, there's vendor takebacks, there's ways we can acquire organizations that there's better ways to manage it than just go raise a bunch of cash. And I think part of the value prop in the last year of trying to enhance what our business model and our DNA looks like, it's an easier way to convince people why to take a ride on our share price and our share structure. And if we were just trying to go acquire companies that don't believe in what we're doing, then it's just going to come down to cash. So I believe our model would be when opportunities present themselves and we do require the cash, that's a whole other issue. We're not specifically looking for that. What else would I say? There could be other opportunities that I know I've seen where, I'm a big fan of trying to eventually migrate to a alternate asset class where we now need to own the assets and have long-term contracts and maybe SaaS revenue associated with them. In those instances, there could be scenarios of raising cash, but that could also be another way of, well, is there a separate, there's many solutions. Is there a separate pref share towards that asset class? Is there debt specifically towards that asset and security of those contracts? There's many ways to look at it. And at the end of the day, we're trying to build the best value we can build for everyone. And it's not about just go raise all the cash we can get at all.
Okay. And this is also from Bork. Are there any updates on partnership with ThermoBuild, and tech on the carbon neutral building?
You know what? Great question. I appreciate that. Obviously, on certain targets, until we can talk about it, I can just say that the intention of the number of those updates in really, I think, August at that point, was having the right energy consortium to go after the development of alternate energy projects behind the meter, behind the fence type, independent, unregulated systems. And I can say, so we have some technologies in there. There's others we haven't announced. We have engineering firms partnered with us. So there are absolutely opportunities that we're nurturing and looking at and getting closer to I guess what would arguably be announcements, but those are very different. So we're talking about, some projects that we're looking at being involved in the energy design. We're talking about could be billion-dollar projects. So it's exciting. And this is when I look out, I'm building a matrix of what are the short-term work that comes in the door. It gives us mechanical services work, control services work, some very quick projects. But I have to layer in the mid-size, what are the ones that might take another 6 months to a year to get done? And what are the ones that are just the ideal, bring the biggest, stupidest margin you could think of with the greatest amount of revenue and profit associated with them? And those ones aren't that quick. A new build takes longer, right? So we get involved before they're breaking ground. So if I did a new condo tomorrow, it could take arguably a year and a half, 2 years to get the actual revenue out of that project. But those are going to help the company reach new heights and new levels in the coming, months to years. And absolutely, I'm very active in driving a number of those. In fact, I would say more than other parts of the business, I'm really originating a lot of those opportunities for us. And that goes more to my background of originating a lot of these types of energy deals. So I'm really excited. Nothing I can claim we're on at this stage, but we're definitely in a number of discussions with, organizations, government, developers, you name it.
Fantastic. And Bork is on fire here with the questions. There was a letter of intent to acquire AssetCo in July. Is there any updates on how that is going?
No update. I think there's a lot of moving parts. I mean, that's always a challenge, and it was very complicated as we put that out. There's a lot of moving parts in there, and it's hard. It's not as simple as buying a business that has revenue today, profit today. Here's what we pay for that. Here's your multiple. There's moving parts in it, and so those moving parts have to be managed and understood in order to also provide value to what the opportunity is. So it's a work in progress. But again, you need to balance many balls in the air, and so there's a number of other things as well that are keeping us busy.
This is from MJJ. Frank, if Spotlight is approved, who will be manufacturing device, and what is the production capacity?
Good questions. In just sort of periphery, I mean, this is something that obviously Iceberg will talk about and update when they choose to update that. I just know that there's a lot of people putting a lot of thought, a lot of strategies around that, and that's being actively worked on. So they obviously looking at supply chain globally. They're making sure it's not like they're stuck already dealing with the manufacturer who can't get the product. So they're actively out there preparing for the eventual, when it happens, if it happens, when it happens, approvals and next steps for various products. Again, the Spotlight 19 is one, but as soon as they're ready, I do know of many conversations and strategies internally to ensure they have the right supply chain, but not something I can convey beyond that. We're pretty excited for what they're doing.
I have a question for you. So one thing I've been seeing a lot with bigger companies are share buybacks. Yeah. And because of that, stocks are going crazy, right? Because they're just buying them up themselves because they have so much cash. Would there ever be a time where you guys would consider doing an issuer bid, filing for an issuer bid and buying up these shares at these levels? Because just like we've been buying it with our community, I'm sure you guys are sitting there thinking, man, this is very undervalued. We could put a bunch of shares on our balance sheet and hold them.
Rich, that is a great question. And it's obviously not something around the table we're sort of nervous or looking at. The reality is we do have some cash. Do I think cash is better spent in other investments to grow the business and ultimately that value? I do think so. I think if we had a tremendous amount of cash on hand and didn't know what to do with it, and that condition existed, that might be a great thing to do. But we know what we can do with it. We know there's other things that can prove more value. And this might be the issue I think a lot of investors fundamentally, as you were alluding to it earlier, longer term investors, short term. If we wear hats, I wear a hat every day of a very long-term perspective. Not a nice hat. I wear a hat every day from a long-term perspective. I'm not making or recommending decisions or trying to do things on, hey, we're going to just blow it all out. And this quarter, this is going to be it. And then there's nothing beyond that. That's just not a sustainable business model. But if I had to think like that, then I would look at different strategies and ways to use the cash to create maybe the prices and the values people want. But that cannot be what we do. As a legitimate company, every single day, we're trying to grow it. So I've always said to people, if I didn't know where to put the money, I might be taking other lower returning alternate assets to hold. As this is a Brookfield model, right? When things are risky and wonky, they're picking up distressed assets and making stupid returns on them. When the market's really robust and there isn't much you can pick up, they're having to do their 10%, wind assets. So I think as a business, if we were ever limited as to where we can place our cash, then clearly that might be something I would say you'd want to consider. But there's way more things we can do with our money to create real value, lasting value, and grow the business. But I appreciate the question.
Okay. And one more question from our persons. I think I heard you had a meeting with John Tory. Anything come out of that you can disclose?
Yeah, so it wasn't John Tory, but that's really funny. I talk to mayors all the time about different things and different opportunities. I'm dealing with government, utility CEOs. I'm dealing with people all the time. And no, but it wasn't John Tory on that particular occasion. And there's always discussions about our offering, what we're doing, how we can, provide more, being more strategic with these people and these organizations that we work with. But no, it wasn't John Tory. But you know, I mean, I know John Tory well. I wrote his environmental policies many years ago when he ran for mayor.
Isn't it funny how rumors start, eh?
Yeah, no, it's funny how rumors start.
Frank,
yeah, I mean, so it's interesting because we do a lot with government. I think part of the value add has always been, I lobbied for almost 20 years. So I know a number of these people. I know how they think. I ran political campaigns. I know how they think. I know how they operate. I know what motivates them. And so at the end of the day, understanding the buyer's mentality and what works, what doesn't, what can sell, what doesn't, is pretty critical in understanding what else you can do with them, how you can do it with them, and more importantly, how you can mitigate risk of deals you might already have. So I think that's par for the course. You know, if you understand them and they're your customers, you then need to make sure you manage your sensitivities, grow where you can grow, mitigate risk where you can. It's just positive. It's part of doing our business.
Frank, this is a great update. Thank you so much for your time today. Thank you for the hat and the jacket. Yeah. Super excited to continue to tell the story, and I'm excited to see what you guys have next. If there's anything you wanted to leave investors with before we said goodbye today, what would it be?
You know, I think it's a great question. I think the reason why we put out these particular facts in the last few days, yesterday, is really more about to understand our momentum and what it is we're doing, right? So we said what we're going to do, trying to give signs of, oh, look, they're doing it. So, you know, I can be cryptic at times, and a lot of this is about demonstrating that momentum, but definitely stay tuned. There'll be other updates certainly this year and hopefully way sooner. And there's a lot of fun things we're working on, so cannot wait to announce them. But just stay tuned. You know, we're going to put out what we can put out when we can put it out. And a lot of our work, most of our work we get every single day isn't stuff that's press releasable. There's singles and doubles. And so every once in a while we say, oh, look, here's a triple, put it out. Here's a home run, put it out. But the majority of our business are singles and doubles, and how we've survived for 40 years. So understand the fundamentals we have. You know, this isn't an exploration company. We have a real functioning business. And so I can just say, you know, look at our fundamentals, track that. And soon enough, our Q4 and really our year end will be out, and really understand what it is we're building here. And you guys are paying attention. You're looking at the key metrics, and I really appreciate your input and your comments, and your community. You're obviously very active. We appreciate that. And if there are questions I can't answer, do not hesitate to ask me, guys.
And thank you so much for joining us again, Frank Carnevale, the Chief Growth Officer of Universal Proptech, UPI in Canada, UPIPF in America. I also got myself a new hat and a new jacket. I will be wearing this a lot. So anytime you see me talk about UPI, get ready. I'll be suited up. Really, really excited to see what you guys can do, Frank. Love to invite you back again. Anytime you have any big breaking news.
I'm sure I'll be back soon.
Good. Anything you want to talk about, we'd love to be the place that you come and you speak to the community. Our community is very, very passionate about UPI. They have no problem buying at these levels. And we're very excited because we believe that you guys are going to go to $1 plus. So for investors that got in at these levels, we still have 400% upside. And that's why we play the game. Thank you guys for watching. If you're not winning, you're not watching. This is Rich from Rich TV Live and Frank Carnevale from Universal Proptech saying, have a nice day, everybody. And we'll see you guys soon.
Thanks, Rich.